Hi there. Yeah, welcome to the closing bell, recorded on the 25th of August, just before we get some news on Jackson Hole. The central bankers having a chinwag together, and often it can be where big announcements are made. They can be market moving, so everything really just waiting for that to occur. And there's a setup in the markets that's quite interesting at the moment as we lead into that. So I just want to show you what I'm seeing. And well, you'll know more than me how the markets are reacting to what they've said. But I'll just show you the setup that is pointing in a certain direction at the moment. So starting with the US dollar, this is a monthly US dollar index. Going back many, many years, as you can see there, all the way back to 2003. You can see that it's been in a long upward trajectory, hasn't it? Over that time, US dollar strength. But we have had a very long period where the US dollar was pretty much treading water. And last year, we had the breakout out of that range, which is 5-year or so range, and we've come back to retest the breakout, the highs of that range, and starting to turn back up, which I find interesting from the point of view of when you break out of a range, you will often sort of have an impulsive move, retest. And if you do retest and then turn up, that can often be the starting gun for a pretty big move to the upside. So just from that classical sort of technical view, it's saying watch out. I mean, if you look in the past, you can see here we had a big long range again, sort of a 5-year range. We had the breakout, and then ultimately it came back to retest the top of the breakout, didn't it? And then took off again, and another retest, and off it goes. So just from that point of view, looking interesting on that US dollar. But if we go up closer and look at what's been going on, you can see that this most recent wave to the upside over the last few years, 2021 up into 2022, and obviously marked out my key areas, the buy zone down there, a long way down, but the point of control around 101 or 102. And it's really done a lot of work here. I got fooled by this. I thought, this is looking a bit dangerous. It could really sell off here. But it ended up getting supported and turned straight back up. And so it is finding support at that point of control, and also the 20-month moving average there. So the uptrend is still in play, this long-term uptrend, that 10-month exponential coming back to retest the 20, and it's turning back up above that 10-month. And that's often a buy signal in those long-term uptrends when it does that. And it's also possibly this month creating a monthly buy pivot. So you can see here we had the high monthly sell pivot, and then it's been just marching lower key bars. And here's your lowest point in the move last month. And if we close this month above the high of that candle, there's your monthly buy pivot. So a few things pointing to that US dollar resuming the up trend. And I guess that would make sense. US rates certainly turning up, aren't they? Growth and, the whole yield curve, which we'll see in a minute, really those rates moving higher. So, maybe we're about to see a move back to the upside in that US dollar, which can obviously have an effect on a lot of things on the commodity front, et cetera, et cetera. So let's have a look at the bonds. So here's the monthly on the US 10-year bonds, and obviously really important stuff going on here. You can see that the rate has been testing the highest levels we've seen since 2008. So, what is going to happen at Jackson Hole? What are they going to do? Are they going to inspire basically a false break of that high, and then the buying is going to come back in? And that could be the starting gun of a big move to the downside in yields. Or are they going to say, no, inflation's too strong, growth is still very strong, things I think will need to stay with higher rates for longer? And does it break out above that level? And the US 10s, start going even higher, surprising to the upside with the yield. So the bond sell-off really accelerating. So you can see it's a very important point technically where we are right now. And we are about to have this important meeting. So it's this could really be important for market direction going forward. I don't really want to stick my neck out too far because I haven't heard what they've said. I'd rather keep an open mind and see what comes out, because I've said to you in the past that these moves to the upside often finish with a double top, some sort of double top, where you've got a big move to the upside, the yields correct, then you get another move which goes to sniff up there, and in the end that's it, and then all of a sudden the thing turns down. I can show you many instances. Rates there, big correction, goes to have another sniff, double top, and that's the beginning of the move to the downside. And again here, big move higher, big correction, goes to have another look, and that's not where we're going. And that's happened pretty much nearly every major high for years has sort of had that sort of price action before yields have turned back down again. So it'll be interesting to see what happens. But, this is a pretty major change of situation in these bonds. We've had this, multi-decade drop in yields going to nearly zero on 10-year bonds, which is absurd. And we've sort of broken out of that trend. So from that point of view, there's a case to be made that we are in a new paradigm. And even if we do see yields fall, possibly we're still in some sort of long-term shift in trend in bond yields. So I'm open to that as well. So it's going to be very interesting. This is really what's going to hinge everything else, what happens here. And I guess I'm not much help in saying, look, I'm open to it doing anything. I guess the thing I'd say is the weekly will be interesting from here. So this is the weekly of the US 10-year bonds. And just want you to note, it's been pretty good. Like we had a double top, came in there. Retest. Once it turned down into weekly downtrend, you're pretty... it was a good spot to then say, no, this is turning down. Double top back here. There. Retest. Weekly downtrend. That was when you want to get on it. Right? And weekly downtrend, that's when you want to get on it. So again, double top here. Retest. Weekly downtrend. That's when you want to be buying those bonds. And here, fell away. Retest. Double top. Weekly downtrend, that's when you want to buy the bonds. So I'll just be watching this. Is this going to be a double top turn down? Well, I'll wait for the weekly trend shift. So if we get that weekly trend shift, that's when I'll say buy those bond ETFs with your ears pinned back. So that's will be a story for another day. But for the moment, allowing that weekly uptrend, allowing for the possibility that this could bust out. And boy, imagine that. We'll be in a different market dynamic then. And stocks, especially long duration stocks, would start to really struggle. Just moving on to gold, because just interesting to see a bit of buying coming in and just where it is technically. So I'm just wondering whether it could start turning back up. We've got these problems in China. If that accelerates to the downside and we get yields moving higher in the US, that Chinese yuan is going to be under a lot of pressure. Capital controls are there. How else do people get money out of China? Is gold and Bitcoin an avenue for some money to come out of China? Have a look at a gold in yen to see what I mean. So looking at gold and where it is right now, you'd think with rates going higher, real yields going higher, gold should be under pressure. And that has been the case. You can see there gold having a triple top from the all-time high, which is a danger. So we've got that old all-time high a few years ago, another attempt, third attempt. So there's a case to be made this could be quite dangerous for gold, that it could keep heading lower. So I'm aware of that. The monthly, we've got a monthly sell pivot in play. You see the weekly downtrend there. This is the weekly chart. So it's negative from that point of view. But if we're just thinking where it could turn back up from, here's the midpoint of the correction of the past few years, 1880. So it's still holding above there. Now, that should be pretty good support if gold's going to be strong. Also from the lows last year, the uptrend, that's still intact, isn't it? It's pulling back to the buy zone of the most recent wave. So you could say that we've got something like that going on. So that means, here's your first wave, there's your correction, there's your next wave, there's another correction, and that's often going down into the buy zone of the previous wave of this wave here. So case to be made that it's all still looking good from that point of view. And really, you'd need to see prices, breaking below that wave low. So that's around $1,800. So below there is a little bit more dangerous. As long as it stays above there, you can say that we're, still constructive for more upside. So from that point of view, it's still holding in there at an okay level. I'm wary of rates and all that sort of thing, but let's see how things develop. Does gold catch a bid with if China starts having troubles? Does US dollar go up and gold go up? That could be the case. So I need to see a bit more buying come in, a weekly buy pivot or something before I get too excited. It's still looking a bit negative in the short term. So it's not really a story for right now, run out and buy gold stocks, but it's something to just be aware of as we move forward, as more news comes out about China, and if stocks really turn down, whether there's a safe haven bid and money coming out of China bid that comes in. So then finishing on stocks, and look, everything is sort of primed for some downside. And this is where I'm saying the charts are pointing in a direction with the US dollar looking like it'll take off and stocks looking a little bit iffy right here. And if you want to have a deep look at what's going on in stocks in the ASX and the S&P, watch my last week's video. Go and search that up on YouTube, the channel that we have there on YouTube for Fat Tail Investment Research. But just a quick roundup is that, here we've got this massive long uptrend. But the thing I'm wary of is the fact that we've had this correction, which I need to just show you just quickly. I mean, people who have seen all this, I guess you can probably switch off because you know it all like the back of your hand, where we've had that huge wave higher from 2020 to 2022. And you can see the correction that we had has come right back to that point of control, the midpoint of the wave. And the fact that it really bounced off there shows you that this wave is very important. So it's found good support at the point of control there. Monthly buy pivot came in, and then we had the rally of the last year, which has taken prices right up, even above the top of the sell zone of that wave. So the sell zone is basically the area where there's a higher probability that a reversal, so a change of direction around that area, will often see a move back towards that point of control. So the fact that we're seeing a possible monthly sell pivot, and you can see the last monthly sell pivot back there was the beginning of a big correction. The fact that, we're going towards the end of August, if prices close out August below the low of last month's range, which is what, 44.11. If the S&P closes below 44.11 at the end of the month, you've got the monthly sell pivot in play. You've got to allow that to then play out, and that could play out into quite a big move to the downside, back towards that point of control, and who knows, could then find support and take off. Fine. Or it could continue on to the downside, as I've discussed, and go and watch those videos last week. So just watching this Jackson Hole again, what are they going to say? Everything primed to surprise to the downside in the short term. Obviously, markets never move in a straight line. It could create that sell pivot, try to rally, and then hit the selling again. It can take some time to play out. But basically, once that monthly sell pivot's in play, you have to go back to a more bearish stance on the market until that gets negated. So just wanted to point that out. Our market as well, I went through last week. You can have a look at the ASX, but I think I've spoken long enough now. Yes, let's see what is said in Jackson Hole. Does it spark a rally in bonds, and then stocks catch a bid, or do the bonds continue to sell off, and do stocks then take fright? All right, well, I guess we'll know, and you'll know more than me. All right, cheers. I'll come back with more next week.